Before you ask, I'm fine. Just a little eye issue. Probably because I'm working too hard for you guys. It's been another crazy week with most growth stocks selling off, and so much so that some stocks that were at crazy valuations just a few weeks ago are now looking like buying opportunities. Because as the saying goes, be greedy when others are fearful. Please consider subscribing if you like this video. Now let's have a look at the news that impacted our stocks in week 46. Starting with the general market, the Nasdaq and S&P are down by about 1%, whilst the portfolio is down by about 8%. But I can reassure you, there's basically zero company-specific news that can explain this drop, meaning that it's probably just surface-level volatility, which we don't care about. You do see, however, that the stocks that are hit the hardest are the ones with profits and revenue the furthest into the future, like nuclear and quantum. So part of the reason might be the growing uncertainty around interest rate cuts. So interest rates impact the discount rate that is used to calculate the net present value of future cash flows. And the higher the discount rate, the lower the net present value. The price of a stock is basically a reflection of future cash flows, so the further into the future the cash flows are, the bigger the impact of interest rates on the stock price. There's a tricky mix today of a lack of data due to the government shutdown, increasing unemployment but sticky inflation, which has caused the prediction for a rate cut on December 10th to go down from 74% last week to 49% today. Luckily, the government shutdown ended last Wednesday after a record 43 days, and the package that was signed extends the federal government funding through to January 30th. On energy, the Trump administration is expected to present a plan for drilling off of the coast of California, Alaska and the Gulf of Mexico, but they're expected to run into quite some opposition, especially in California, due to the risk of accidents and pollution. Bitcoin also took quite a tumble. It spent months above 100k and it even touched 94k at some point this week. At the meantime, Web3 adoption is continuing, so I'm not really worried about the sector. I also have a crypto portfolio because I think it's going to be massive in the future. It might be a couple of years away, just like quantum computing and nuclear, but I definitely think it is coming. And I have the same approach to crypto projects as I do to stocks. I look for really strong business ideas, which I think can be a great fit in the Web3 ecosystem, really strong founders. So if you want me to include my crypto portfolio in the channel, please let me know. On the AI race, the Wall Street Journal reports that China is struggling to find the chips it needs due to the export restrictions that the US has put in place, mainly on players like NVDA. With AI companies, Chinese AI companies like DeepSeek even having to delay the launch of their models. Now there's a debate going on whether it's wise to restrict the export of these chips to China. Some say that by restricting it, they slow down the development of Chinese AI companies. Others say by restricting it, you motivate them to build their own chip companies and their own chips, which in the mid to long term will strengthen their position. So here's some really interesting data on the US consumer coming from Steve Eisman via Fitch. I talked about Steve Eisman before. He has a really nice podcast called the Steve Eisman Playbook. So this shows 60-day delinquencies for car loans. So people that are behind on their car payments for more than 60 days in the US. And it shows prime customers and subprime borrowers. So people in this category have pretty bad credit scores. And so it's interesting because this cohort of people will be hit first when economic times get tough. And car loan repayments are one of the last things that people stop doing because they need their cars to get to their job. So if they cannot get to their job, they cannot earn any money. And this delinquency index has hit the highest level, 6.6%, since measurement began in 1994. So that's a bit worrying and something to keep an eye on. So finally, a few words on share voting. So if you own a share in a company, you have voting rights, which means that if a company puts forward a proposal, let's say the performance package of Elon Musk at Tesla annual shareholder meeting, you can vote whether you're in favor or against it. And like this, shareholders get a vote and they vote in ways that maximize their returns and what is best for the shareholder, which is what the management is there to do, to create shareholder value. Now today you have big funds like the ETF managers who own up to 30% of the S&P that are not actively voting these shares, but rather rely on proxy advisory firms such as ISS and Glass Lewis to advise them on how they should vote. And so these firms have been getting under a lot of pressure from guys like Elon Musk and Jamie Dimon from JP Morgan on the outsized power that they have over companies when it comes to share voting. And so this has recently caught the attention of the Trump administration and the Federal Trade Commission, so they'll probably launch an investigation. And we'll track it here to see what comes out, but it could be interesting going forward. So moving on to stock-specific news, like I mentioned, there's not a ton of new news, but I did update the file we're using here. So in this column, you can see the market capitalization, so the total value of the company. Above it, you see a chart of the stock price over the last 12 months. It's based on the Friday closing price of each week. And in the dotted line, you see the target that I have in my mind of where I want to start thinking about buying the stock. So just to take AEVA as an example, currently you can see that the blue line is below the dotted line, which means that it's below my target price, meaning it's starting to get interesting and I'm starting to look at buying maybe some more AEVA. You can also see that reflected here in the last column, which is the current stock price versus the buying target, which is -20, so in the green right now, meaning that the current stock price is about 20% below my target price. So starting with AEVA, down 24% for the week. No real news. The only thing they reposted was a nice project they're doing in collaboration with Brightline, a Florida high-speed railroad company, and Soterion AI. So they basically put AEVA's LiDARs on the train. And what the CEO of the train company said is that this technology has the potential to transform the way railroads monitor and inspect their corridors. So the LiDAR is basically on top of the train, monitoring the tracks and giving back information that the companies can use. So I just thought it was an interesting use case for AEVA. Then American battery technology company, down 19%. Again, no real news. Amprius, the only news they came out with is that they founded the Amprius Korea Battery Alliance to get closer collaboration with these different partners in Korea that could help them eventually scale up their manufacturing as their demand is increasing. ACHR Aviation down 4%, again no real news. Then BFLY down 5% for the week. They probably would have been down a lot more if they hadn't been teasing this announcement the whole week. So in their first announcement this week, they showed what is coming in November on the timeline of their previous launches, which were pretty big. The one they mentioned before was the BFLY IQ3, which is their latest handheld device, so their core business. And then secondly, later on this week, they announced something AI-driven, enterprise-ready, revenue-generating, and workflow transforming is coming. So let's see what comes out of this in the next couple of weeks. Then Howard Hughes, they came out with their Q3 earnings on Monday. The stock reacted positively, 11% up. They also gave an update on how they're tracking with the acquisition of their insurance company. I posted a video on this if you want to know more details. Nautilus, no news, but they're continuing their rally of late, up 20% almost for the week. Moving on to OKLO, on Tuesday they announced a memorandum of understanding with the Idaho National Lab to do some more experiments on advanced nuclear fuels. The stock didn't react really positively. It's down 13% for the week. And again, coming closer to my sort of buying target. So that's interesting to see. Palantir, no real news, down 2.2%. All week there was a lot of news around Alex Karp's persona, a lot of interviews and videos coming out, but no real news. Same for Recursion, down 10%. Tesla is down 6% for the week. On Tuesday announced that full self-driving is coming to Korea, so that's cool. And in general, lots of advertisement around safety and full self-driving. So one of the things they claim is with full self-driving, supervised engaged, you're 7 times less likely to be involved in a car accident. And that's probably really going to be the accelerant to get people onto their full self-driving platform. And finally, Samsara, -3%, no news on the company. Moving on to Quantum Corner, NVIDIA up 1% for the week. They'll post their earnings the coming week, so I'll let you know how that went. Alphabet down 1%, no real news on the quantum front. Then D-Wave down 20%, also no real news. IONQ down 20.4%. I included them in the earnings update video that I made this Friday, so check that out if you want to know more details. And Rigetti finally down 25%. This brings us to the end of the video. I hope you learned something and maybe picked up an investment idea or two. Please consider subscribing if you enjoy this content. As always, I work hard to give you a ton of relevant information, but please supplement it with your own research before making an investment decision.